So nice that you're with us, and welcome back to everybody to another webinar organized by Princeton for everyone worldwide. We're very happy to have Thomas Piketty with us from the Paris School of Economics. Hi, Thomas.
Hello.
Tomorrow we'll talk about a brief history of equality, and we will learn whether it would be the same talk if it were a brief history of inequality. So let me start perhaps with a long history of inequality. So I have a figure here from Guido Alfani, which shows, how the fraction of wealth held by the richest 10% of the population in Europe changed over the centuries. So it starts in 1300. And of course, the Black Death led to a decline of inequality. And then it was constantly rising. And then the Great Depression led to a large decline. And then the welfare state arrangements. And then since the 1980s, we have an increase in the inequality again. The next thing, of course, there's a question about wealth inequality. There's a lot of talk about, and since the 80s, the interest rate is declining. And, there are various explanations why the interest rates are declining. And the question is also, what are the implications then if the interest rate is declining for the wealth inequality? So I have a little example here. There are two groups. There are the rich. And the rich, they have actually, when they invest, they have a cash flow which grows at a rate G upper bar, while the poor, when they invest, they only get a growth rate of the cash flow with G lower bar. So the rich have better investment opportunities. And if I just use the Gordon growth formula this way, and we look at the value of the wealth, evaluated at the current price, even though the cash flow is the same with the same interest rate, the value of the cash flow is just given by the Gordon growth formula. And if you look at the wealth ratio, the rich versus the poor, it gives you this formula. And as the interest rate goes down from this level to this, on the x-axis I have the interest rate, the wealth ratio is actually then growing up very, very significantly. So the decline in the interest rate alone would actually lead to, in this simple example, to an increase in wealth inequality. Of course, wealth inequality is only one form of inequality. There's income inequality, consumption inequality, wealth inequality, as we talked about, social mobility, which is more dynamic measure, who is rich, who is poor, is changing back and forth. And there's also the resilience inequality. There might be different people. If they're hit by a shock, they might be able to bounce back, and others might not be able to bounce back. So this difference in ability to bounce back after a shock, that might actually translate in different income and ultimately in different wealth. So thanks again for all of you for answering the poll questions. So here are the poll questions, and here are your answers. So the first answer is, should equality be a social objective on its own, even if it at the cost of a Pareto worsening or not? And people said, 63% said yes. So even if, we can have better equality and everybody might be worse off, it's actually still desirable. The 63% said this. 37% said no. So that's a very strong endorsement of equality. And then the question is, which inequality should be ranked highest? Income, consumption, wealth, opportunity inequality, social mobility, or resilience inequality? The answers were income inequality is 13%, consumption inequality 4%, wealth inequality 18%, and opportunity inequality is 48%. So by far the biggest number of people said opportunity inequality is the worst. Social mobility is 16%, so it ranks above income inequality, slightly below wealth inequality, and resilience inequality only gets the 1%. So which inequality is more important, the top 1%, or is it some Gini coefficient? That's 39% thought the top 1%, Gini coefficient 61%. And should we treat the policy differently, whether the wealth is generated by self-made wealth or inherited wealth? And there was 19% thought it should be treated, a distinction should be drawn, self-made or inherited, and 19% self-made and 81% inherited wealth. And then the question was, once you have this wealth inequality, it might also lead to philanthropy. Is philanthropy a very effective measure also deal with inequality or not? Or is it much more the tax redistribution? And philanthropy is very effective, so 6% only, not so effective, 56%, and there might be an optimal mix, 38%. So philanthropy itself is not really an excuse for wealth inequality. So with these answers to the poll questions, I will pass on the mic to Thomas, who will tell us a brief history of equality, and we will learn everything about equality, what he has done over several decades now in his research. Thanks, Thomas.
Thank you, Markus. I'm not sure I understood the sampling for the polls came from the people listening to your webinar.
Yeah, listening at the moment, yes.
Oh, listening at the moment. Yeah. Okay. That's interesting. Very interesting. Okay, so let me share my screen. I think it's okay. Can you see this? Okay, that's good. So this is the topic of the talk today. So basically I'm going to summarize, present to you some of the findings which you will find in this book, A Brief History of Equality, that was published by Harvard University Press, I guess last year, or actually the year before, in 2022. So I strongly recommend you this book. This is a very short book, unlike my other books, and I really think it's also a better book in a way, a clearer book. At least I'm trying to make progress, respond to discussion, and still a lot of progress to make. But anyway, at this stage, I will recommend, if you want to have a sense of what I am up to read this book. So this will be a summary of this book. I will also present some findings from the World Inequality Report 2022, which you will find online, the full version, very easily, and some data from the World Inequality Database, which is very collective research. That this is the outcome of a very collective research program involving more than 200 now researchers from all over the world, trying to combine all the different data sources we have to measure inequality of income, inequality of wealth, and now also gender inequality, inequality of carbon emissions. So basically we combine household survey, tax data, national accounts, wealth rankings, all these different data sources, and try to put them together in the most consistent manner. All the computer codes are online, everything is online. Is this perfect? No. Can this be improved? Yes. Can you help us? Yes. Please go online, look at the computer code, make suggestions to improve, participate, if you know new data sources for different country. So this is really ongoing work. This is not supposed to be perfect. I think this is better than what we had, 5 years ago, 10 years ago, 20 years ago. So we are making progress, but, we are still, there's still a lack of transparency, generally speaking, about income and wealth distribution, which, we would certainly like to have better data sources. Anyway, let's start with a little world tour of what we know about inequality. So let's start with a simple indicator, which is the share of national income going to the top 10%. So, just to get the orders of magnitude, we are talking about 10% of the population. So if we were in a world of complete equality, they should have 10% of total income. If we had complete inequality, they should have 100%. So of course, the real world is always in between. But what I want to stress here is two main findings. First, it varies a lot. So basically it can go from, so it doesn't go from 10 to 100, but it goes from 20, 25 to 70. So the most equal country in the world are going to be, Sweden or Norway, where it's going to be, say, 25. This is before tax, after tax. So this takes into account monetary transfer like pension and unemployment insurance, but in-kind transfer are not there. If we were to look, we also have the series online after tax, after all in-kind transfer. Then the top 10% share in Sweden, Norway will go down to 20-25%. Before tax, it will be more 25-30%. So these are the most equal country in the world. The most unequal country, according to our database right now, will be South Africa, where it will be 70% of total national income going to the top 10. In Brazil or in Mexico, it will be like 60% or a bit more. Generally speaking, inequality tends to be higher in the south than in the north. So rich countries are more equal. So that's maybe finding number one. You have a lot of variation, and rich countries are more equal. Finding number two is that these things are not frozen. So it's not that Europe has always been more equal. It actually, or the US, even the US, which is more unequal than Europe, looks relatively equal as compared to South Africa or Brazil or India or Saudi Arabia. So but it's not always been like that. So in fact, in particular, Europe used to be very unequal up until the World War I in the 19th century. So Europe in 1910, it was not like South Africa today, but say it was close to Brazil in terms of top 10% income share. It was 50-60% of total income going to the top 10%. And it has been, divided by 2 over the course of the 20th century, and now it's more 25%. What I will argue, and what I argue in my book, in my brief history of equality, is that this long-run movement toward more equality. So when I say long run, I mean over the course of the 19th and mostly 20th century. So I'm not talking about the Middle Ages of Guido Alfani that you showed us before. I'm really talking about, when I talk about a long run movement toward equality, I really talk about the past 100, 150 years, or 200 years to some extent. But that's what I mean by the long run. So rich countries have become more equal through a change in institution, through the rise of social security, progressive taxation, and this process that has made them more equal, in particular through more inclusive social investment in education, is also the process that has made them more prosperous, or at least this is what I argue in this book. So that's very striking. So with this first indicator, top 10% share, maybe an even more interesting indicator is the bottom 50% share. So Markus, in your presentation, you were asking people, do you prefer the top 1%? Do you prefer the Gini? In fact, what I would prefer myself would be more this bottom 50% share and top 10% share, so that we have sort of a very concrete view of what living individuals are getting. Because the problem with top 1%, of course, is that it's only the top 1%. The problem with Gini is that it's very abstract. You don't really see what it means for concrete individuals. Look at this indicator, bottom 50%. It's quite meaningful. So this is 50% of the population. So by construction, if we live in a world of complete equality, they should have 50% of total income. If we live in a world of complete inequality, they should have 0%. So real world, of course, is always in between. It varies quite a lot. So in a country like South Africa, it's going to be only 5% of total income for the bottom 50%. In Nordic Europe, it's going to be 25, 30%, or even a bit more than 30% after all in-kind transfer. Now, when you are the bottom 50% and you have 25%, say, of total income, of course, you're poorer than average by definition. After all, you are the bottom 50%. But it means that your average income is about half of the average income of the society in which you live. So, you are poorer than average, but you're not hugely poorer than average. Whereas when you have 5% of total income as the bottom 50%, it means your average income is 1/10 of average income. So you are really very, very far from the average, not to mention, very, very far from the very top. So, what this shows, again, is that the distribution matters a lot. Because, if you only look at macro aggregates, at average national income per capita, average GDP, per capita, you're missing a lot, because for a same average GDP per capita, the average income of the bottom 50% can basically vary by a factor of 1 to 5, depending on whether you have 5% or 25% of total income for the bottom 50%. So bottom line, the distribution matters a lot. If you care about basic poverty, if you care about basic capabilities, access to food, housing, culture, everything you care about. So, that's sort of the broad view. Distribution varies a lot. Rich countries tend to be more equal, but they've not always been more equal. They have become more equal, and the fact that they have become more equal has come together with the fact that they have become richer and more prosperous. So that's the general idea of the book. Now, this is
causality clear. It could also be that we go in the transmission generally is first a country to grow. Few people become very wealthy, and then it spreads subsequently to the rest. Is it clear that the causality goes from equality to more growth, the connection between growth and equality?
No, it could go in all directions, but now in practice, so I will come back historically if we want to understand how this happened, what I will argue is that it happens through specific change in institution, a rise of social spending, education, progressive taxation, and so and this facilitated, in particular for broad-based investment in education, the rise of productivity. Let me return to this in a minute. This is for income inequality, where there's been a lot of progress both in average income and relatively more equal distribution in the long run, at least in rich countries. Now, when it comes to the distribution of wealth, so here this is a simple graph coming from the World Inequality Report 2022. You can see that the progress in terms of wealth equality, or spreading the wealth, if you want, has been much more limited than for income distribution. So, if you look at Europe today, this is again the most equal region, but still it's very unequal. So, if you look at the bottom 50% share in net wealth, net household wealth, this is going to be about 5% or 4% of total wealth in Europe going to the bottom 50%. Okay, so that's more 4%. That's more than in Latin America, where it's only 1%. But it's still very small for the bottom 50%. And so we will come back at the historical evolution of this. We will see that there has been some equalization of wealth as well. In particular, if you look at this middle 40% group in Europe today, so the people who are not in the top 10, not in the bottom 50, they have a significant fraction of the wealth today, which was not the case 100 years ago. So there's also been a movement toward more equality for wealth, but it's been more limited than for income. And we will try to understand why, and we will discuss whether this could change in the future and whether it's desirable or not, and how we can do that. In the World Inequality Report 2022 and in the World Inequality Database, there's a lot more data, in particular on gender inequality. So here it's a simple indicator of the share of total labor income going to women, both wage labor income and self-employment labor income. You can see there's been an improvement in most regions in the share going to women, although not everywhere. In China, there's actually been a decline. But even when you have an improvement in Western Europe or North America, we are still very, very far from gender parity. So this is discussed in the World Inequality Report. I'd be happy to answer.
Just to make sure I understand these numbers. So when a woman is not working, it's also counted here. No, it's counted as zero income. Is this correct?
This is the share of women in total labor income. So if women have zero, if all women have zero, yes, their share will be zero. So why do we look at 50% as gender parity? Because when you look at labor time in Time Use survey, including, of course, domestic labor time, women actually provide more than 50% of total labor time everywhere, if you include domestic labor. So, you will think, that, 50% of, income and control over resources could be a desirable target after all. And the point is that, we are very far from.
But the Claudia Golden result that women prefer to devote more time to family, at least you see in the data, that would tend to something smaller than 50% in the labor share.
I'm sorry, I didn't understand exactly what.
So like Claudia Golden's research, where she shows that women tend to prefer be less career focused, so they're more family focused. And hence that explains to some extent the lower wage rate for women. And it also would lower this 50 parity aim. You wouldn't.
Yeah, no, okay. No, you're saying maybe they tend to prefer domestic labor over working in firms. Well, first, I'm not sure this is true. But in any case, even if they did prefer domestic labor over market labor. This is not a reason to have unpaid labor,
Yes.
so that's my point. But this can be discussed, of course, as well. Last dimension of inequality, which is quite important in our work, is the inequality in carbon emissions, which is quite important because when we just compare country averages, we are missing a lot of the action. And, here the bottom line is that inequality within countries or within regions of the world are very important and are, as important as inequality between countries. So if you take, again, the example of Europe, which has, the country which had a bigger reduction in emissions than North America, as we all know, still, you have enormous variation. So if you look at the bottom 50% of European household, they have 5 tons. That's including the carbon content of imports. This is too much, but this is sort of, this should go toward the 4 or 3 or 2, but this is not completely out of line with the long-term objective of getting to 2. The problem is that, the top 10, you have 30, almost 30 tons. If you are looking at the top 1, you will get 70, 80 tons. In the US and North America, you have already 70 tons for the top 10. So, it's going to be difficult to explain to people in the bottom that they need to reduce their carbon emission if you don't start by having a drastic reduction at the top. Otherwise you will end up with a gigantic yellow vest movement everywhere. So here the bottom line is that you need to, if you don't have a drastic reduction of inequality, it's going to be difficult to reduce emission at the same time. Okay, now let me get back to the historical perspective of how some of this transformation have happened. So this is coming from this book. I mean, if you're if you have a lot of interest in the history of inequality, you can also read these other books of mine. But each of these 3 books is about 1,000 pages long, so you really need to have a lot of time and to be very motivated. I don't ask you to be so motivated. So if you have a limited time, we all have a lot of things to do. I recommend you read this one, which is 200 page long, 250 page long. You can read it in a weekend, and I think it's a sort of synthesis of what I have been finding over in the past, and it's also maybe a clearer book and maybe a more optimistic book in the sense that I try to stress, the positive evolution of the past and how they came about. And, you can always say, there's too much inequality, and in some way, this is true. But, here I want to stress the positive evolution toward more equality, which I think in the past has been a huge historical success. And I think it's important to start from there. So I'm not going to present everything in the book. Let me try to focus on a few big historical evolution. So first, regarding income inequality. So here, this is data for France, but this is quite representative of what we have in Western Europe in general. And so, this is what I was showing you with the world map before. In the long run, the share going to the top 10%, used to be between 50 and 60% in the 19th century. It's now 30, 35%. In Sweden, it will be 25, 30%. And if you look after tax, after all in-kind transfer, it will be as small as 20, 25%. So, as compared to over 50% before World War I, it's a very substantial long-run reduction of inequality. And I will argue, this has been, a very positive transformation in the long run. The share going to the bottom 50% and the middle 40% has increased a lot in the long run. Now that's for income inequality. Now, if you look at exactly the same graph for wealth inequality, this is what you get. So again, this is for France, where we have pretty good historical data on wealth and inheritance in particular. But we have similarly good data for Sweden, to some extent for Britain, to a lesser extent for Germany. But anyway, for every European country where we have good historical data, we get almost exactly the same kind of numbers. And the bottom line is, in the long run, there's been a compression of inequality, in the sense that, look, the top 10% share, used to be 80 to 90% of total wealth. It is now between 50 and 60%. So it's a very substantial reduction of inequality. But, there's still a lot of inequality. So if you look at the situation today, the bottom 50% share in a country like France is going to be 6%. That's more than in the 19th century where it was 1 to 2%. So it's a lot more in a way. But, for 50% of the population, it's really very small. Let me make clear that this is not due to an age effect. So if you look within the group of people, say 20 to 35, 35 to 60, above 60, it will be almost exactly the same number. So in particular, the bottom 50% share is always less than 10% and usually, around 5% within each age group. So this distribution also looks a lot like the distribution of inherited wealth. So if you look at the new generation and who is receiving wealth from the previous generation, this is roughly what you have. Now, there's been, I would say, some improvement in the long run, in the sense that we now have what I call a patrimonial middle class, which did not exist before. So, what I mean here by the patrimonial middle class is this middle 40% group, which are in between the top 10 and the bottom 50%. So today, they have about 40% of total private household wealth in a country like France and in most European countries. In the US, it used to be almost 40% 20, 30 years ago. Now it has gone down a little. Now it's more towards 30%, but it's still more than in the 19th century where it was 10 to 20%. Now if you are 40% of the population and you have about 40% of total private wealth, it means that on average you have roughly the average wealth of your country. So what are we talking about? In Western Europe today, the net wealth per adult is going to be somewhere around 200,000 euros, 200, 250. So we are talking of people, this middle 40%, these are people who have anywhere between 100, 200, 300, maybe 400,000 euros in net wealth. That's roughly the range of people we are talking about. And so these are people, typically they would own their home or they would own a little business. And this is the patrimonial middle class. So these are people, who are not enormously rich, maybe from the point of view of a billionaire, whether you have 200 or zero is almost the same thing. But in fact, it is very different from zero. Because, when you have 100 or 200 or 300 in wealth, it means you have a kind of economic security. So it's much more than money. It's also sort of your bargaining power vis-a-vis your own life and vis-a-vis the rest of society. You have the possibility you can set up a little business, you can buy a home for your family so that you don't need to pay your rent every month. So, I think in the long run, this rise of a patrimonial middle class, which did not really exist in the 19th century, has been a very positive development because it has allowed, especially after World War II, the emergence of this patrimonial middle class has come with having broader groups in the population with more economic security, being able to build homes, start up businesses. So that's a very positive transformation. So we see also for wealth a long run evolution toward more diffusion of wealth, but it's still limited in the sense that again the bottom 50% has very little. And so what I'm going to be asking for
okay, can I ask a few questions?
So
you see in the top 10%,
sure.
You see that from the 1980 onwards, it's going up a little bit.
Yeah.
Could this be due to a decline in the interest rate environment, essentially that the discounting, and hence there will be wealth effects purely from the fact that the interest rate is going down?
Yeah, well, just in the 80s, interest rates are actually quite high at the beginning of the 80s. But I don't think we have to look at all the rate of return on different forms of assets, the evolution of income inequality itself. I think the primary explanation for the rebound of inequality in the 80s, 90s comes from the income side and the income inequality side. So the income inequality, has started to increase a little bit again. So, what you see for wealth as a, first order approximation is just the translation of this. Now, you can also have certainly some inequality in rate of return between different wealth groups that has also increased, and that's yes, that's also part of the that's certainly also part of
another question from the audience is like, was there a lot of movement of people, of wealthy people moving out of high tax countries to tax havens, and that, away from France in this particular chart?
No, I mean, here we're talking about the whole population. We're not talking about the small groups or whatever. So that's not. I don't think that's very relevant. Although the existence, of course, of tax havens and the decision to develop a system of free capital flow without any common taxation, common regulation, in the 1980s, 1990s. Has certainly contributed, to put pressure on the tax system and progressive tax system, and has contributed to this relatively good performance of high wealth groups in general. But again, here I want to focus on this long run trend, which at the end is more important to me than what happened since the 80s, 90s. Yeah. And so I want to focus on this positive long run trend and try to see where we can, where we can move from there in the longer run.
And then one more question concerning Sweden, because you mentioned Sweden. Is it true that the wealth inequality in Sweden is actually, there's quite some inequality in wealth, but you said not in income. So do you have countries where wealth inequality is pretty extensive, but the income inequality is not, or does it always go hand in hand?
It tends to go hand in hand. There's a high correlation between the two, but wealth inequality is pretty high everywhere, including in Sweden. I mean, it's not as extreme as in the US. So, US has both more income inequality, more wealth inequality. But, even in Sweden, wealth inequality is going to be, comparable to what we have here for France, or even a bit more, because you have a lot of indebted people in the bottom 50%. So at the bottom, you actually have some negative wealth shares for the very bottom decile. So it can be even more than a little more than in France.
And do you have a measure of opportunity equality as well?
In a way, that's partly a measure of this, because as I was saying, the distribution of inherited wealth is going to be very close to this. So, that's one of. So I'm going to come back to this question of equality of opportunity in a minute, and how we can improve this. Let me maybe just to conclude with the historical perspective. Before World War I, all European countries were incredibly unequal, including Sweden, which had at the time a very, very unequal political system, with voting rights concentrated on very top wealth holders in a way that was really incredibly unequal. And so this was Europe, before World War I. And here I want to illustrate the fact that, there's been still a major transformation. So if you compare, Europe 1913, Europe today, you can see this middle, the rise of this patrimonial middle class, which is still quite significant. So, the two are true at the same time. There's been a lot, big movement toward more equality, but still there is very high concentration of wealth. In the US, as I was saying,
could it be that it's a war destroying the two world wars, destroying all the capital stock, and the capital was mostly owned by the wealthy?
Yeah, well, except that in 2020, the capital stock has been, reconstructed for a long time. Yeah, and what's important is that still there's been a structural change in the distribution. So indeed, initially the destruction, unfortunately, is part of what's going on. But then what I want to stress is that the new institutions that were set up during this period, allowed to have a different kind of economic growth, with even much more prosperity than what we had before World War I, but more equally distributed. So how did it happen? Well, one factor is certainly the rise of what I call here the social state, which you could call the welfare state. I prefer to call it the social state because I want to stress in particular the role of education. So if you look, education is probably one of the most important example, I mean, together with access to health and other public goods and public infrastructure, but education, used to be a very elitist. So if you look in every European country before World War I, total education spending was less than 0.5% of national income. It was very elitist educational system. This has been multiplied by 10. Today it's 5-6% of national income. In the US, before World War I, it was about 1% of national income, so it was also quite small, but it was twice as large as Europe. So the US had a big educational advance over Europe during most of the 20th century. In particular, in the middle of the 20th century, in the 1950s, the US already had 90% of a cohort going to high school at a time where it was only 20-30% in Germany or France or Japan. And you have to wait until the 1980s, 1990s to converge to this sort of universal or quasi-universal access to high school. And, I think there's lots of good reasons to believe that this is the primary factor and, probably the most important factor behind the rise of productivity in general, and this much more inclusive educational system have contributed to both more equality and more prosperity. You can see also the stagnation of total educational investment in the past 20-30 years, which is very paradoxical because the fraction of a generation going to higher education, of course, has kept increasing a lot. Today it's like 60% of the younger generation go to university in a country like France. It's 70% in Korea. It was only 20-30% in the 1980s, but the total educational spending as a fraction of national income has actually stagnated to about 6% of national income. And, if you want an explanation for the slowdown of productivity growth, to me, this is the most obvious explanation you can think of, depending on how you write your endogenous growth model and your equation for, accumulation of human capital. If you have this historical stagnation of total educational investment, that's probably not going to help. So that's part of the in the long run, that's big part of the explanation behind productivity growth and rise of more equality. Now, progressive taxation also, I would say, has been a huge historical success. In particular, it's very striking to see, the US had, one of the most progressive tax system in the world, between 1930 and 1980. The top tax rate was 81% on average during half a century. Apparently this did not destroy US capitalism. If anything, the US around that time had not only the highest productivity in the world, but this was the time of maximum economic gap with the rest of the world. Certainly because of the education gap I was describing before. So the bottom line is that the main historical factor behind the productivity growth has a lot more to do with broad-based education systems than with having very large inequality. So when you have this if you look at just the
but if you look at the tax base, in a sense, it could be that the tax rate is very high, but there are a lot of loopholes and ways to get around the taxes, so nobody pays the top tax rate. So
yeah, well, you will find in the book a graph, an effective tax rate, and you will see that, in the middle of the century, in the US from 1930 to 1970, the effective tax rate and the very top groups were, 70%, 75%. So you're right, they were not 90%, but, they were 70, 75%. It was hugely progressive, which did not hurt economic growth at the time. I think also contributed to the setup of a social contract, which made the middle class and the lower middle class, ready to pay more tax, to pay for the welfare state. Because if you're in the middle of the distribution and you feel people at the top are escaping taxation, as is the case today, are you going to accept paying for people who are poorer than you forever? Maybe not. And so I think that's probably the the most important part with progressive taxation. Anyway, if we look at the simple, time series, what we see over time is that, after the 1980s, after the Reagan decade, you have a huge slash in progressive taxation. So, as we all know the story, Reagan comes in and says, okay, I'm going to divide by 2 the top income tax rate from 70, 80% to 30, 35%. Maybe inequality is going to go up, but, the size of the pie is going to grow up so much, you're going to have so much productivity growth, so much innovation, that, at the end of the day, the average wages and average income of average Americans are going to grow like you have never seen. Now, the problem, of course, is that this did not happen. And the growth rate of national income per capita was actually divided by 2. By the way, I'm not saying it was divided by 2 because the top tax rate was divided by 2. I think the main reason why it was divided by 2 is probably the stagnation of educational investment, which I mentioned before. But in any case, what we should all agree upon is that, cutting by 2 the top income tax rate is not enough to boost productivity growth and innovation. And I think a big part of the political problems we see today in the US, with the Republicans going like crazy against pretty much everybody, the rest of the world, migrants, China, everybody, has to do with this big disappointment. At the time of Reagan, there was a lot of optimism that, you will get, average Americans will benefit a lot from globalization and tax cut, etc. We've not seen this. And now you need to find an explanation for this failure. And unfortunately, the explanation of Donald Trump and others is to say, oh, this is because the rest of the world has taken away, the work of, hardworking middle-class America, and I'm gonna take it back for you. So we're not talking about a pretty dramatic failure and evolution. Yes.
There was, of course, the China shock, or the globalization moved a lot of industries outside of the United States. So if you have, so you look very much on inequality within the country, but it might be that because there's some industries moving outside of the United States, that inequality in the US goes up, but the global inequality is going down.
Oh, yes, that's
for sure. How do you balance
sure.
These 2 forces, essentially?
No, you're perfectly right, but I think we could have done even better. We could have had more productivity growth in the US, with more increase in education and other public infrastructure. And I think my point here is simply that the cutting tax progressivity, was supposed to bring more innovation, more productivity growth, and it did not. And so I'm trying to think about the alternative policy. So now, looking at the future, I want to make 2 points. One about the redistribution of inheritance, and the next one about education, actually. So about inheritance, if you look at so here I'm describing a system based on the idea of redistribution of inheritance, where basically you would have everybody at age 25 in this simulation is receiving a minimum inheritance of about 120,000 euros, which will be about 60% of average per adult wealth in Europe right now. You can put similar numbers for the US, a bit higher in dollar terms in US today. Okay, I'm not saying this is going, and this is financed by a progressive tax on inheritance on top children, and also progressive wealth tax, which I think is better suited to bring big revenues than progressive inheritance tax. But anyway, it's a combination of the 2 in this simple simulation. Okay, so in effect, what this is doing is that the bottom 50% children who today receive close to 0, they're going to receive 120,000 euro at age 25. And the top 10% children who today receive a bit more than 1 million on average, they will actually, in this simulation, receive about 600,000. So we're still very far from complete equality of opportunity. And if you want my opinion, I would be ready to go much further than this. But, what I find interesting is that, you have lots of people who pretend they are in favor of equality of opportunity at a very abstract theoretical level. And then when you make concrete proposal like this, they start to scream and they are very afraid and they say, oh, but, all these poor children, they are going to do lots of stupid things with the money, as if rich children always do clever things with the money they receive. And I think here we are at the core of the issue. Do we really care about, equality of opportunity or not? So, look, I'm not saying this is going to happen next week or next year. I'm just saying, if we want to look at the long run, and if we want to know what we should add to the kind of 20th century welfare state and progressive income tax system to move further in the direction of more equality and also more social mobility and also more prosperity, I think this is what we should look at. Now,
so of course, what would you do? I mean, inheritance, can you say a little bit comparing the wealth tax with inheritance tax? What are the trade-offs there? And the second thing is, if you have family businesses who employ a lot of people, how would you then, take the inheritance tax might destroy the family business, or you would move them all to a stock exchange, or how would you organize this inheritance tax for family businesses?
I think in all these family firms, you have lots of, engineers, lots of middle or middle upper level managers, who would be very happy to become shareholders and who would be excellent shareholders in the company. So I know, the family members always think that they are the only one who can have the power and remain in charge. And, look, it's a very human feeling and, I don't blame them. I'm just saying this is wrong. Historically, having more people, to be involved in the management of the company and more generally in participating to the economy, is good. And I think, this kind of monarchical view of the economic system where you believe that a particular individual or a particular family, because they had good ideas sometime in the past, or maybe they were very lucky, or probably a combination of the two, they should keep, all the decision-making power, until they die, or even the following generation. But already until they die is a problem, because if you have a good idea at age 25, do you need to keep all the power until age 95? It's not clear. And so I think this extra mobility. So how, is good. Now, how would they pay the tax? You can imagine ways where, they sell some of the shares, and, you can have workers in the companies who have a priority rights to buy these shares. You can think of all sorts of innovative schemes to allow engineers, managers, and various wage earners group in these businesses to buy the shares in the long run. Now, again, I'm not saying this is going to happen next week, but I think if you don't do that, if you don't do something like this, then we will always have very high concentration of wealth. So, I think, you cannot say, because another story will be to say, we should just wait for growth and, market competition to lead to a diffusion of the wealth. The problem is that we've had growth for the past 200 years, and still we don't see this much of a diffusion of the wealth in terms of the bottom 50% share. So another.
But you didn't talk much about social mobility. It could be that, the top 10% are now different people than the previous decade's top 10%. So it moves around all the time.
Of course, they have moved. I mean, hopefully they have moved. But what I'm talking about the bottom 50% children, who don't receive anything. So I am talking about mobility, exactly. And, I'm just saying, you cannot just rely on, the few poor individuals who become rich. I mean, that's very nice for them. I'm very happy for them. But, here we have 50% of children today. So just to get the number straight, in Europe today, which is still less unequal than the US and much less unequal than Brazil or South Africa, the bottom 50% of children receive 5% of inheritance, when the top 10% of children receive 55% of total inheritance. And the question is, does it make sense for people who pretend they believe in equality of opportunity? It's a simple question. And to me, it makes no sense. And so the other view, will be to say, okay, maybe it makes no sense, but from a point of view of economic incentives and economic efficiency, in fact, if you try to reduce inequality, you're going to reduce incentives for family at the top to do all sorts of useful investment and saving. And so, don't try to reduce this inequality, because otherwise, the sky is going to fall and the economy is going to collapse. Okay, I have some respect for this view, except that, we had the same view 100 years ago about the redistribution from the top 10 to the middle 40. And this view was wrong, in the sense that, the diffusion of wealth towards the middle 40, historically, I think was a great success. And so I think it makes sense, to consider that we should continue to go in this direction. So, this is all.
Let me push you a little bit harder. So what you see a lot in the US, that wealthy people provide extra education for their kids. They get very, very special education, which is also a form of inheritance in a sense. Would you also, like China, for example, outlaw essentially these extra educational schemes?
Did they outlaw this? When did they?
Yes, so all these extra educational schemes, President Xi made it much more difficult that you can actually have some, hire some tutor, some private tutor to educate your kids better, to perform better in school. And it was very expensive, it's very excessive, and China outlawed it now. Now it went so far that actually, these tutors come as cleaning ladies disguised in order to do that. But that's also a form of inheritance. And it also gives an extra opportunity to wealthy kids.
So let's talk about education. So here, this was the transmission of financial wealth, but now the transmission of education is also quite important. And I wanted to conclude with this. So this is the situation in the US right now. So this is data from Emmanuel Saez and Raj Shetty. We were able to match social security records of the parents and students. So you have the percentile of parental income, the rate of access to university. And basically, it's almost the 45-degree line, not completely. So, if your parents are very poor, you still have a 25% chance to go to university. It's not zero. And if your parents are very rich, you only have a 95% chance to go to university. So it's not 100. But, it's close to the first diagonal. And of course, in fact, it's even worse than that, in the sense that the kind of university you go to when your parents are rich have, of course, little to do with the university you go to when you come from the bottom. So here, what I am saying is that, there's again a huge gap between the theoretical discourse about equal opportunity, super mobility, etc., and the reality of the kind of society in which we live. And I think it's important here again to be serious about the numbers and to set targets. I mean, you can say this is the best we can do. There's nothing we can do, just like for inheritance.
But you probably agree that one has to start before the university education.
That's for sure. You have to start before, but that doesn't mean you cannot do anything at the level of university education. But in any case, I think, but, to conclude with a very positive, final thing is that in the long run, even for education, if you look at the distribution of educational spending, we've had some improvement. So if you look today, like in France, so here I look for a generation, the top 10% of children who receive the biggest education spending, as compared to the bottom 50% of children who receive the smallest education spending. So today we have a more equal distribution than in 1910 and a lot more equal than in very unequal settings like colonial settings where you had basically complete segregation by education, like in the south of the US before the civil rights movement. And it was probably even worse in French Algeria than in the US South, by the way, in terms of difference in education budget between the schools of the Algerian Muslim and the school of the settler. So, as compared to sort of very unequal societies of the past, either Western countries 100 years ago, or of course colonial and segregated countries, we've gone to a more equal distribution of educational spending. But this is not the end of the story, because even if you look, even this distribution for France here in 2020, which looks equal, in fact, of course, the bottom 50% group, they are 5 times more numerous than the top 10, and they are getting only not even twice as much in terms of total budget. So in fact, if you look at spending per children, this is the actual data. So, the top children today, they are going to the very elitist French Grande École. They will get 200, 300,000 euros in individual spending. So it's like what you were saying, it's an additional inheritance. And in the case of France, this is actually public spending. So, it's in a way, so there is a lot of hypocrisy everywhere, not only in the US, and in my country, I can tell you, this is, the public spending in effect are exacerbating the initial inequality in family origins. So, I think no country here is in a position to give lessons about this. And, all I'm saying is that, this long run movement toward more equality of opportunity, access to inheritance, access to education. This long run movement is not over yet and has to continue and will continue. And, I think we should all be concerned and be interested in this long run evolution. Thanks a lot for your attention.
No, thanks a lot. It's great that you have this positive perspective on it and going forward. One thing you didn't mention, perhaps one sentence, universal basic income. Is this also in your scheme, somewhere in your thinking, or that's?
Yeah, except that it already exists. I mean, it's already there in most Western Europe. So to me, that's already, it's already done. So now we'll have to look at the next step, which is a universal inheritance. And but so let me make clear, the basic, the minimal inheritance I'm describing is in addition to basic income, in addition to public education. It's not instead of.
But of course, a lot of these extra benefits you get from the social welfare state is conditional that you're poor. The universal basic income would say everybody gets it as a starting point, independent of the initial conditions.
Right, but then you need to pay it with a more progressive income tax. So, at the end of the day, it's by definition, only people below a certain income levels get it. So in terms of net transfer, the question is, do you want to increase the basic income as compared to the level of minimal income? So, in France today, it will be, you will get 600 euros per month for a single individual. Maybe you can increase it to 700, 800, but, if the full-time minimum wage is at 1,200, 1,300 per month, net of all social contribution income tax, you're not going to put the basic income at the same level. So by definition, there are limits to what you can do. So maybe you can increase it a little bit. You can make it more universal in the way it's distributed, more automatic, less stigmatization. That's very important. I'm not saying no improvement can be made. A lot of practical, but that's not going to change dramatically what we already have.
Okay. Very good. I know that you have a hard deadline, so let's stick with it. We are 1 minute over. Thanks a lot, Thomas. It was fantastic to get your perspective on inequality and this positive perspective that we are moving to a more equal opportunity society. Hopefully, it also works at the global scale. Thanks again. And thanks for everybody for joining us, and hope to see you next week again. Bye-bye.
Thanks a lot, Markus. Thanks a lot to all.
Thank you.